Hello traders, today is the 13th of August 2011 and happy Saturday to you all. This video is about markets manipulation. In this video we will talk about the causes of market manipulation, how the market is manipulated. Okay, this is a big issue. Okay, we need to know what is going on, how the markets can be manipulated, and what usually happens after the market is manipulated, and who are the market manipulators, and how they manipulate the market itself. We are looking at the Euro USD on the monthly chart, but before that, for those of you who are new to us, we are the TSTW SYS08 traders, and our website is www.stochastic-macd.com. For every trade, we use 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. Okay, now looking at the Euro USD, this is one of the currency pair that is highly manipulated. Okay, there is a reason why this currency pair is highly manipulated. Okay, there is what we call illegal market manipulation, and also legal market manipulation, which means sometimes government can intervene in the market, manipulating the market in a legal way, and there are times when some dodgy or unscrupulous traders will manipulate the market one way or another. Now, I want to talk to you here. The first thing I want to talk about the rate decision, interest rate decision. Interest rate decision are market manipulation, but these are what I call a legal market manipulation when the chairman of the central bank can change the interest rate for one reason or another to intervene in the market and to manipulate the market. Even though this is a legal and normal way of intervening in the market, this is also a market manipulation, because it will change the flow of the market, the movement, the dynamics of the market will change instantly as soon as the rates is changed. This is a typical legal market manipulation. There is also another market manipulation, that is credit rating agency that are manipulating the market. Recently we see the downgrade of the US credit rating by the Standard & Poor's. This is a typical market manipulation, because at that point in time the market is supposed to move in one direction. After the downgrade of the US credit rating, the dynamics of the market has changed completely. Some traders lose money. Those traders are supposed to make money, but they lose money. Some traders are supposed to lose money who gain money. This is a typical market manipulation that can change the dynamics of the market at any point. Sometimes we have what we call accidental market manipulation, which can happen during market volatility, so the price going up and down, one way or another, creating what I call a distortion or exaggeration. These are normal, what I call accidental market manipulation, where the price will move into a place where it's not supposed to go. This is another what I call market manipulation. There is another market manipulation where we see a direct intervention of a government. We see recently the Japanese government intervening in the market, selling the yen in order to devalue the value of yen. So by doing so, making the goods of Japan cheap compared to other competitors. So recently, as you see, the USD yen was going up the whole day. So if you were buying that particular day when the Japanese government was intervening in the market, selling the yen, therefore the USD yen going up the whole day, I was just buying the USD yen, and the price was just going up. So you just buy anywhere, anyhow, and placing your stop loss maybe 50 pip during that day. You were just going up, because we know that particular day that the Japanese government was busy selling the yen. Therefore, the USD yen was going up. This is what I call a government intervention, another type of market manipulation. Okay, so this is also legal, okay, market manipulation. Okay, sometimes we see excessive bullish momentum or excessive bearish momentum that can create also a market manipulation. This will be done through the news. So we see, for instance, gold is going up, so we'll see a lot of news coming out on television, in the papers, everywhere, talking about buy gold, buy gold, buy gold, and the price will continue to go, which means there will be excessive bullish momentum in one direction until the crash will happen. This is what we see here. You see on this chart here of the Euro USD, the price was going up, going up, going up. People during that time, you see in the paper everywhere, people say the euro is bullish, you should buy the euro, you should buy the euro. This is on a monthly chart for 4 months. During that time, people will be saying buy the euro. This candle here, this is what we call exaggeration here. It push it there only to stop there, you see, and then 4 months continuously the price could not display a new higher high. Okay, this candle here, this market distortion, market exaggeration created by excessive bullish momentum. Sometimes you will see that also for a bullish, bearish, excessive bearish momentum. When the price will go down, go down, go down, we are seeing that right now for the USD yen. Okay, but we see very often the price will go down, and because sometimes the price want to reach a certain level, especially for those of you who pay attention to the smart media line, sometimes the price is due to turn down or to go up, but the smart money will move the price to the smart media line, okay, because they want a price to go to a certain level, okay, before they decide, okay, to make another trading decision. You will see very often if you are day trading, okay, sometimes if you are watching the 4-hour chart, you notice that the price will go down, but the market will wait for the 4-hour candle to be completed first. So if you sell before the 4-hour candle is completed, you may lose, which means the price, you see clearly that you should buy, you should sell or you should buy, but the candle is not completed yet. We are talking here about the time effect. The time effect. The market is waiting for one particular candle to be completed. We see that last year on the yearly chart of the Euro USD, coming to the 31st of December 2010, the market was going up, going up, going up for the Euro USD, because the bulls want to finish the year 2010 very, very bullish. Okay, and after that they just sell it down. Okay, so you have to remember the time effect when the market is waiting for a candle to close first before making another trading decision, creating what I call exaggeration, which means when you receive a signal to sell or to buy, you see the price continuing to go in the opposite direction for a long time as the market is waiting for a particular candle to be completed before changing direction, creating what I call a kind of, okay, a mild market manipulation or market distortion or market exaggeration. Okay, so we are talking about a candle to be complete, or sometimes the market is waiting for the price. For those of you who are using the pivot line, you will see sometimes there is a clear-cut indication that the market should retrace back down or go up. The market will push it to S1 or S2 because that's the best place for the smart money to sell or to buy. So they will push the price up, creating what I call a market distortion. For those of you who are using the Bollinger Band 50 volatility tool, you have seen it very often that the smart money want to push the price, they want to sell on the upper side of the Bollinger Band 50 volatility tool before selling, but the signal may be given earlier, but the best place to sell, they will move it to the edge of the Bollinger Band. The movement that the price will move from the selling point to the edge of the band, that's what I call a distortion, or again another kind of mild market manipulation. On the other hand, if the price going down, the smart money may want to move the price to a key level, a support level, or a critical price level, or the price may reach a critical price level, but the smart money want the price to dip below it to retest okay, the base of that zone to see whether there are buyers or sellers before making a trading decision. These are a type of mild market manipulation. As I'm speaking to you now, we are talking about the Euro USD. You can see clearly in the previous video that are titled market correlation. Most of you can see the pattern that I show you, a downtrend, then a pull up, and then a bit of a pullback. You see a downtrend, went up, pull back, and then it went up and then come back down. You can go and watch that video, market correlation. You can see the chart. Pay attention to this zone, down, okay, went up and pulled back, went up. Now all the other market, the Dow Jones, the S&P 500, all went down big time, okay, went down big time. Now you see the euro here, it couldn't go down much. There is a huge market manipulation in the euro USD right now. Why? Because if the euro USD currency pair is going down, the banks will go down, and the banks are not prepared to go down anymore, because remember, during the recession, the banks, the value of the bank went down big time. So this time again, they should go down, but they're not prepared to accept that, because the value of the bank went down so much that they are not able to accept another movement to the downside. Therefore, in France, in Belgium, in Spain, and in Italy, they have banned for 15 days shorting. Okay, so anybody want to short banks in those countries cannot do it for 15 days. This is another market manipulation. A typical market manipulation is shorting, or is a banning shorting. Okay, when you see a government intervening, or a Security Exchange Commission banning shorting, as it happened in September 2008 up to December 2008 in the United States, when the Security Exchange Commission banned shorting, that's a typical market manipulation. And again, you see recently in France, in Spain, in Belgium, they banned shorting for 15 days, starting last Thursday. You can see clearly this is another market manipulation. The bank cannot afford to see their value go down more, and the euro going down means that the bank should go down. Therefore, all the time, as I told you before, that when you receive a signal to buy the euro, everything is okay, that's perfectly okay. But when you're about to sell the euro, be very, very careful, okay, because there's a huge market manipulation in the euro USD. You see the movement of this price here, this movement from here to here. This is a typical market manipulation. If you learn to understand the market manipulation, you'll be able to recognize what I call market distortion and take advantage of that. There was a downtrend, and then the price did consolidate here. The movement to the downside should start from here. Projection of the movement from here to the downside here, we should project it from here to the downside. But instead of going down from this level here to the downside, they move it up before the downtrend has started, limiting the damage that can happen to the euro. As you can see, the price is supposed to go down the same amount as it went down from here to here, should be from here to the downside, but it was projected to the upside first before allowing the price to come down, limiting the movement to the downside. I want to show you here some of the stock in France, Société Générale. These are the stock that traders are shorting, and recently they banned shorting. Why? Anytime smart traders are shorting a financial instrument, there is a reason for it. They don't go and short any stock or any financial instrument in the void. There is a fundamental reason. If you want to sell a stock for a long time, you must have a valid, fundamental reason. You don't sell a stock and for no reason, because the natural movement of the price is to the upside. So if you want to sell, you must have a valid reason. Smart traders sell, ordinary traders buy, because the smart traders know when a financial instrument should go down, because they will check the fundamental and the technical and sell. And when the hedge fund and the smart money are shorting a financial instrument, if you are investing in that financial instrument, you should pull your money out straight away, because there are some dirty stuff hidden somewhere. That's why the smart money is busy shorting it. Okay, now recently they banned shorting for 15 days. This is another market manipulation. This is the Société Générale listed in France. As you can see here, the price supposed to go down. You see, it went down. This is a continuation pattern, a downtrend consolidation. It's supposed to go down more. The ban shorting to limit the downward movement to this level here. A smart move by the French government. Here again, this is another candidate here, BNP Paribas, also in France. Okay, another bank. Okay, went down. Okay, now consolidation. People want to sell. The shorting has been banned for 15 days, creating what I call a distortion, a pure market manipulation. Another one here, Crédit Agricole, which is also in France. also a trajectory to the downside, okay, movement to the downside, and shorting has been banned because the bank cannot accept any more movement to the downside. Talking about the Euro USD, my favorite currency pair, the Euro central bank is busy protecting the euro. There is a valid reason for it, and as the dollar is let alone to crash down, the Europeans are busy protecting their currency pair, which is absolutely right. But you have to understand that there is a lot of market manipulation taking place in this market. I hope you enjoyed this video regarding market manipulation that you will put into practice in order to cream the market consistently. Apart from other things that I've said before about the time, the place, okay, the intervention, the rate decision, okay, intervention also decision by credit rating like Standard & Poor's downgrading the US credit rating. There is also a greed and fear, the overbought zone, the oversold zone, the exaggeration, the news, okay, can create, okay, a kind of a market manipulation. I thank you for watching, and we will speak to you very soon. We are the TSTWSYS 08 traders.